Welcome to CFTC Talks. I'm your host, Andy Bush. Hey, just a quick reminder, there's a disclaimer at the end of the show that's important for you to hear. Hey, over the last few months, we've been covering the fintech space and digital currencies and blockchain. We've had Alex Rampell from Silicon Valley VC firm Andreessen Horowitz on talking about where fintech is going. That was a lot of fun. We did a Bitcoin roundtable with CFTC division directors, and we've had on a whole bunch of other different industry participants. So today, we're going to continue on this theme. And we thought it would be a really good idea to have some folks on who are knee-deep in digital currencies and blockchain, and that would be the Chamber of Digital Commerce. Now, their mission is to, according to their website, to promote the acceptance and use of digital assets and blockchain-based technologies through education, advocacy, and working closely with policymakers, regulatory agencies, and industry. Their goal is to develop an environment that fosters innovation, jobs, and investment. So joining us today are Davine Kim, the Global Policy Director and General Counsel, and Perianne Boring, Founder and President. Both of you, welcome to CFTC Talks.
Thanks so much for having us. Thank you.
Yeah, thanks for schlepping down to the agency. This is great to have you in person. I think it's really fun. So let me just start off. Perianne, tell us why you started the Chamber. Like, what need or problem were you trying to solve with this?
Well, I'm a former congressional staffer, so I worked on the Hill, and this was an issue that came across my desk. As an economist, when I first learned that there's this virtual currency that was not created or controlled by the government or a corporation or anybody, that was just a fascinating concept to me. And so I had to learn more about it. Yeah. And that turned into a very deep, intense personal study of Bitcoin and blockchain. And the more time I spent learning about this industry and this technology, I eventually came to realize that this is the most important thing I will ever see in my entire lifetime. I've absolutely got to be a part of it. At the same time, and this was early days, the industry had a lot of challenges from a policy perspective. So 2013 was really the year when I started digging deep into these issues, and the industry saw a handful of pretty negative events. You had Silk Road, Mt. Gox, Liberty Reserve. It was all over the news. Pretty bad from a PR perspective. And that also created responses in Washington. There were multiple hearings that year. We had agencies who were issuing warnings about how dangerous this technology is. And I was looking at this kind of from the outside saying, where is the industry? They should be here. They should be explaining what is going on, telling the other side of the story, because it's not all about nefarious use cases. There's a lot of good that's happening too, but that was not coming out. So it was pretty obvious to me that the industry needed a dedicated resource of people that are here in DC, that their job is to be here every day, all day, to talk to policymakers, to talk to the Hill, to talk to law enforcement, help them understand what's going on, be a resource to them, and also help industry as well understand what their regulatory obligations are. Mm-hmm. And sometimes that's not clear because this is very new and transformative technology, and there is a lot of regulatory friction and unclarity. So we're really here to help the industry and government be a resource to both and help promote a platform for public and private sector dialogue to have policy formation that helps the growth of the industry, but at the same time it addresses concerns that we all have, like investor protections, consumer protections, and other issues.
Right. Yeah. I mean, I can't think of a more fertile field than helping people understand a very difficult new technology, and then also helping the people that have created the technology communicate to the public and to others. So to me, looking at that, obviously you're going to be busy for a long time to me. So it's great. I mean, and I think it's so needed. As someone myself who I was familiar with it back in 2012 and 2013, but just to have amped up and really dived into it and talked to people about the technology, the more you learn about it, the more you realize there's so much more to it than just what's on the surface and what you read in the news. So that's exciting. And to that end, the Chamber has several initiatives and working groups that are part of your group. Tell me about the Token Alliance, because that seems to be, there's just a lot of interest in the media and amongst regulators on digital tokens.
Right. So the Token Alliance is our newest initiative. We launched this in the fourth quarter of 2017. We originally launched with about 160 individuals, and today we've grown that to over 250 people who are both token and or blockchain experts who are helping advise on really how to address the issues that we're seeing in regards to ICOs. So we put this together in response to the activities we've seen with token issuances. There's been billions of dollars raised through...
Yeah, and just this week we had, or just recently, the Wall Street Journal just listed a whole bunch of the ICOs and just how it continues apace, even despite the peak in Bitcoin and coming back off. So still tremendous interest.
It's real numbers, and some of it's good and some of it's not. There absolutely is nefarious activity. There's certainly people who are taking advantage of ICOs and really not going about this in an ethical way.
Right.
And that's where we see very high regulatory risk. But in terms of ICOs and token issuances, there's a lot of regulatory uncertainty and lack of clarity of who has jurisdiction, what exactly are the rules, where does this fit in, do we need new regs, new laws? There's a lot to figure out there, and that's going to take several years of work in DC and with Congress and with the appropriate regulators. So in the meantime, we are being very proactive as the industry and bringing the industry together and saying, and we're actively writing best practices. So if you're going to issue a token, what do we expect to see from you? If you want to participate in a token sale. So for the most technology savvy grandma in the United States who may be participating in a token sale, if she wants to participate in this ecosystem, we want to make sure that she has some resources that help her do this in a safe and responsible way. And we're doing this because we think, one, it's our responsibility, but two, it's the right thing to do. All industries have standards and guidelines and best practices, and it's absolutely appropriate for us to do that. And we believe that this will address the mass majority of the nefarious activity that we will see. And it should help lower the burden on the regulators as well. So it'll be easiest for folks to identify that activity, and hopefully it will help decrease anything that we wouldn't consider ethical.
That sounds great. Yeah, rules of the road would be helpful, obviously. So again, education, right? To spend a lot of time doing that. Well, Amy, tokens, I mean, this is a big space, right? And it covers a lot of different things. On the horizon, are there other issues that you're keeping an eye on and watching?
Yeah, absolutely. I mean, certainly, as Perianne's described, tokens are kind of immediate priority given the market activity we've been seeing. But certainly tokens are a really broad topic, and it can represent a lot of things with this technology. So, as a general matter, we're looking at, how best to regulate them within each of the potential avenues that they exist, but also from the big picture and kind of allowing this industry to grow and giving them some runway to do that. So we're considering what that might look like, what it should look like, and identifying the points of friction there. And particularly interesting are Commissioner Quintenz's calls for a self-regulatory organization. We're looking at that closely. It's an easy thing to say, but actually standing up something like that with credibility, funding, governance, and structure is no small task. So we are looking at this in stages with the potential for multiple variables. And we're seeking the input from our members who, so that we can help to develop a unified and cohesive approach.
Yeah, that makes a lot of sense. A lot on your plate there. Creating a new regulatory body. It's part of the territory. It's the challenges with the new technology. But one of the biggest issues in the space is, and that you read about it all the time, is that there are no rules written to protect consumers in the financial system. I mean, and of course, it depends on what you're talking about here. Obviously, from the CFTC standpoint, we clearly regulate the futures industry, but we do not regulate the underlying cash market. So who is currently regulating the underlying cash market from your viewpoint?
Yeah, well, and that's a question that we get a lot and do a lot of education and explaining to try to help people be aware of what's out there. So the spot market in the U.S. is regulated. It's regulated both at the federal level at under general principles of anti-money laundering, as well as under the Bank Secrecy Act as a type of financial institution called a money services business. So as a result, these businesses have to maintain an AML compliance program. They file suspicious activity reports and maintain other record-keeping and reporting obligations, much like banks do as well. So in addition, because of the way they're treated on the federal side of things, the states also regulate them as money transmitters, and that is a regulation that occurs at the state banking department level. So what that means is that they have to obtain a license in those states, and those licenses come with obligations. So you have to maintain certain capital requirements, certain liquidity levels, bonds to ensure that the payments that you owe can be paid, background checks on principals, and other things like that to ensure the integrity of the business that's being offered to customers. So these serve an important consumer protection function. In addition, the FTC and other agencies have consumer protection authority under UDAP, unfair and deceptive acts and practices, as well as sanctions, which kind of exists as an overlayer over all of that that are imposed by Treasury. So certainly there is a lot of regulation out there in this space, but I'll mention that we viewed this as a flawed system. The requirement to obtain 50 state authorizations to operate nationwide, not to mention some territories, that's extraordinarily burdensome. And it's not just in the application process for those licenses, but you also have to undergo periodic examinations by each state. So, in addition, the exchanges have no exchange has been able to achieve a full 50-state licensing solution. And that's not necessarily because they don't qualify, but because the requirements are too onerous or too discordant with what would be considered sound business practices in these markets.
That's a really good point. I mean, here we are in 2018, and we still don't have one exchange in this industry that's fully licensed across the entire United States. That to me is a regulatory failure, and we are falling behind. There's other countries in other areas of the world who have figured this out and who are really jumping ahead of us. So there's a lot of friction in that, and it's an issue that we take seriously.
Yeah. So there's this unique web of regulations surrounding the underlying spot markets.
Right.
It doesn't enable efficient or effective growth in this industry, or oversight for that matter.
Yeah, I think the state of New York has probably one of the more thorough licensing structures that I've seen.
With only 4 licenses granted and 2 trust company. Yeah.
Well, and I think that's tells you a little bit about how the private sector views that, is that they're not rushing to go utilize it right yet. They're studying it and so on. But the burden that you mentioned is interesting because it comes at a cost, right? So I guess the question is that for Perianne, and I think I know the answer, but I'm going to ask it anyway, but what is the Chamber's support here for an answer on the overall regulatory structure?
I mean, when it comes to the approach of regulation, for us, we would like to see a more coordinated approach between the states and the federal government, as well as between the federal government and the various regulators on the federal level. So there is a patchwork. It's also worth mentioning that there are lawsuits between state governments and federal governments right now on this very issue. Where, in specific, the OCC has, put forward this concept of a fintech charter, and they're being sued by the state of New York, which isn't good for anybody. No parties involved. And here at the federal level, you have, we really have kind of a fragmented approach to regulation between CFTC and SEC, but it goes way beyond that with FinCEN, who's regulating this as a currency, IRS, who's regulating this as property, and then you have 2 different consumer regulators. There's a whole host of law enforcement, and what we see really lacking in the United States is just an overall plan of what is the regulatory approach for the U.S. And there's a lot of different agencies and a lot of different stakeholders who have their plan for their specific area of jurisdiction, but there's no overarching plan. And I mean, I will say that the CFTC has really been kind of the the shining light out of all of this. And Chairman Giancarlo has been one of our biggest champions and advocates, and he's turned into one of the most beloved figures in the entire industry for the way that he is approaching this. And I wish we could clone him and get him involved in other conversations that are happening in this town. But having a unified approach and a vision and a strategy, just for one, would be a first step. And then coordinating the different regulators and law enforcement and so on and so forth.
And if I could add to that, I would agree that CFTC commissioners have been quite supportive. Commissioner Quintens, Commissioner Giancarlo, and Commissioner Benham this morning, coming out on a podcast.
CFTC Talks, my podcast. No,
yes.
Just
shameful endorsement for your podcast.
No, I'm not allowed to do that, but thank you.
They've all recognized the opportunity here, and I would echo what Perianne said as far as a unified view as to all that this technology can achieve. There are these financial products that we're looking at and certain financial transactions that can be facilitated and made efficient and effective and do great things. There's so many more things too, in identity and healthcare and insurance. And when you think about these non-financial applications that are really important, I think, to help us move to the next level technologically. And so having an overriding understanding of that at the highest levels, and then having that inform how you regulate, I think is extremely important. That's exactly what Perianne was saying. And then, I'll just add, so when we think of, regulation and what we're looking for, we're looking for something that's effective, thoughtful, and tailored to support market growth. And I say that, subject to kind of three overriding principles. The first would be that virtual currencies and blockchain-based assets are treated fairly. So they wouldn't be treated differently than other similarly situated transactions. And second, that since this technology does offer all these other potential benefits, whether they be tokens, currencies, identities, in ways that aren't contemplated by existing laws. So in some cases, we might have to make adjustments to what's there to accommodate these technologies while still achieving what our objectives are, whether it's market security or national security or consumer protection. But there may need to be some adjustments since many of these laws go back decades when these things weren't even contemplated or barely contemplated. And then third, I think what we've also kind of started talking about here is, the issue of overlapping or duplicative authority and oversight. That's not helpful for growth either. And so something that's much more streamlined yet effective is something that we're looking for.
I understand. Yeah, and just let me go back to the comment about Chairman Giancarlo. Thank you for that. Our role here is not to decide what innovation is good or bad. It's just to make sure it's safe, And so, if you go back to the 1990s, everybody talks about pets.com, but the thing is like you just don't know with these new technologies. And we just want to foster open, competitive, safe markets. And so that's really our viewpoint. And I think the chairman's reflected that numerous times. I have as well on the show and in conferences and so on. So thank you again for that. Let me just come back to you, Amy. Give me your top three areas for policy you're going to focus on. I mean, you talked about a lot of issues and things like that, but what are you going to, you have to kind of narrow down a little bit to some extent. Otherwise, your mind kind of explodes with all the things that you have to get done. Like, what are the top three things that you're going to look at and focus on?
Yeah, certainly this issue that we've talked about here is one of the big ones. How to achieve an effective and efficient and a fair regulatory oversight model for that industry. In addition to that, I would say educating on anti-money laundering and sanctions rules, how they apply, and how this technology actually can be used to reinforce the objectives of those laws. And I think that tends to get lost in the national dialogue. It's more kind of fear about, maybe a couple of statements in the media, but there's a lot that's going on in this industry to protect our markets and our businesses and our security, really. So that's an area that we're focusing on. And then last, I would say tax. The taxation of virtual currencies is not, I think, appropriate to what the nature of this digital asset is. That's something that was determined by the IRS 4 years ago, which at the time may have been where we needed to be. But I think that now going forward, we've learned a lot, and there may be better ways to approach that.
Fair enough. All right. Before I let you go, Perianne, I got to ask you, from where you sit, what do you see are like the future trends in this space?
Yeah, so the top 3 trends that we're monitoring, one would be the topic of central bank issued digital currencies, blockchain-based virtual currencies. I had the opportunity to actually travel to Singapore back in November with the Chairman Chris Giancarlo was there as well to meet with the Monetary Authority of Singapore on Project Ubin, where they have taken the Singaporean dollar and tokenized it across 3 different blockchains. And what they were doing at that conference was sharing the details that came out of those first 3 tests. So we are seeing a lot of central banks around the world starting to explore the monetary policy benefits of blockchain, which is very interesting and very exciting. Number 2 would be the tokenization of all assets. So we touched on ICOs, but this goes on way beyond just crowdfunding 2.0. It's also tokenizing any kind of asset. So blockchain technology is a value transfer protocol for digital assets.
And let me just stop you there, because this is what's so cool about the technology. I mean, if you think about China and real estate and the questions of who owns the real estate and how to unlock the value of that, this is the DLT blockchain is an amazing way to take a look at that and solving that issue. So I'm just sorry, I didn't mean to interrupt you, but I get excited about it because I think it's cool.
So you can track, trace, record essentially any asset, tangible or intangible, using blockchain technology. So we will continue to see all sorts of industries start to integrate this technology for those purposes. And then the third would be smart contracts, using blockchain technology for smart contracts. So we represent a number of financial institutions. All of them have pretty strong practices underway using the potential of smart contracts in financial services and above and beyond that. But I do believe we'll start to see implementation of smart contracts in the very near term.
All right. From the Chamber of Digital Commerce, Perianne Boring and Amy Kim, thanks for coming on the show today.
Thanks so much for having us.
All right, that's a wrap for CFTC this week, CFTC Talks this week. Remember, if you want to hear more podcasts, you can go to our website at cftc.gov and click on the podcast button, or you can find us on iTunes by searching for CFTC Talks on your podcast app. But also, I mean, we're on iHeartRadio, Spotify, Google Play, and a Stitcher, a whole bunch of others. I'm excited because I have Spotify, but I have probably all of these. So whatever works for you guys, I'm pretty sure it's out there. So just hit subscribe if you want to get it every week. We'll be back next week with another guest or guests on our quest to learn about the markets we watch. I'm Andy Bush. Thanks for listening. But wait, we're not done yet. It's time for a disclaimer. The CFTC is providing this information as a public service, and it is neither a legal interpretation nor a statement of CFTC policy. Reference to any specific product, service, trademark, manufacturer, or service provider does not constitute an endorsement or recommendation by the CFTC. The CFTC is not liable to any consumer or any third party for any direct, indirect, incidental, consequential, special, or exemplary damages or lost profit related to the use of the information provided or referenced in this podcast. Selection of guests on the podcast does not imply an endorsement of any particular individual or entity. Many individuals and entities provide similar services to those of the guest. The views and opinions expressed by the guests in the podcast are their own and not specifically endorsed by the CFTC. Moreover, the information provided in this podcast should not be construed as investment advice. Consumers should rely on their own inquiries as to accuracy and relevance of the information incorporated or referenced in this podcast and assume the entire risk related to its use. The CFTC is providing its interpretation of market trends solely to inform the public of a framework for projecting possible outcomes under different scenarios. If you have any questions concerning the meaning or application of a particular law or rule administered by the CFTC, please consult an attorney.